clean application is the state tax credit's only going to be available for new construction in 2021. That's for both 4% and 9% applications. And with that, if there are no questions, I'll hand it off to Sarah.
Good morning, everyone. I have number 3, which is fairly simple. Remove the public notice requirement. Does anyone have any questions regarding that change?
A lot of clapping of hands.
Virtual clapping.
Yes.
Okay, I believe Timothy Hicks has number 4 and 5.
Yeah, so we now require that property management companies be licensed with Oklahoma Real Estate Commission at the time of application. And we have changed the 5 open rule to only apply to 9% applications. Do we have any questions or comments?
Let's pause for just a second before we hand it off. Danette, do you see any questions in the chat room?
No.
Okay. All right. Okay, I think Edgar, let me see. I see one. If the manager is an affiliate of the owner, is that still required? You'll have to check with the Real Estate Commission. That's going to be pretty much our standard answer on any of these questions about having to have a real estate license. You just need to be in compliance with what their requirements are or have an exemption. Okay, let's move on to Edgar, I believe.
Yes, good morning, everyone. The next change is we have added a requirement on for acquisition rehabs on existing developments. Applicants must provide a current independent third-party appraisal value shown both as is and as rehabbed. This must be completed by an MII appraiser operating in the state of Oklahoma. You can find that in page 13. Our next change is the capture rate. So we have included what capture rates will result in fail threshold. And those are elderly would be a 15% capture rate, and then family is a 10% capture rate. And that is found on page 34. Does anybody have any questions? No. Okay, I think it's Corey.
Okay, just a moment. We have a question back on the management company. It says, how do you know at the time of application if the management company is licensed? I think that's what the question is.
Well, what we say in the application is you have to provide proof that you are either licensed or that you have an exemption from having to have a license.
Okay. Edgar, could you repeat the family capture rate?
Yes, I'm sorry. The family capture rate is 10%.
And Edgar, I think we're going to Sandra next.
To Sandra, yep.
Is it to talk about compliance monitoring?
Yes.
Maybe Sandra is muted.
Sandra, we can't hear you.
I hear her.
Yeah, you're not muted, but no. No.
Can you hear me now?
Yes.
Yes.
There we go. It was a button. So sorry about that. As all of you may have read or seen, we're going to change our compliance monitoring fees. They haven't been increased since 2021. Since 2012. So we're going to raise them effective 2021. It's a $75 across the board flat rate increase and $2 per unit. And then we have some new categories that we've added. So for single family homes, or for duplexes that are on the same tract of land, we added a higher rate because now the IRS has clarified that we have to inspect every single building. So of course, if they're duplexes or single family homes, we have to look at each one. And then we added a category regarding selecting average income, because that is going to be a little bit more complicated. And it's just a flat fee of $150 increase, which really is not that much compared to what you could get recaptured if using another set aside. And I don't know if anyone has any questions regarding the rural housing. I know there were a lot of comments. I think we were able to clarify that pre-2012 fee and post-2011. So I would be happy to entertain questions. Is there anything in the chat, Danette?
No.
Okay. Okay, then I think Corey's going to wrap it up.
Okay, back again. Daryl, we may set a land speed record here for fastest training. On page 64 of the QAP, we added some language about additional credits just to allow for us to have the right to grant any request for additional credits. You know, we're going to administer and determine that on a case-by-case basis in the event any additional credits do arise. And I'll throw it back to Daryl.
Okay. That pretty well concludes the 9 points, the real high points that we wanted to talk about. So I'm going to open it now for any questions that you may not have had the opportunity to ask yet, or something that you may have thought about while we were talking. Went off screen. I can't see it. Danette, can you read the question? Can you see it? I can't see it anymore.
Let's see.
I can read it. It says, can you expand on appraisal requirements? Daryl had mentioned this would be discussed.
Yes, I think that's what Edgar was going to cover. Number 6, Edgar.
Yes, I'm gonna get those requirements now. One moment, I'm pulling that up. Sorry, I just had it. Okay, so that will be for existing developments for acquisition rehabs. And those requirements are, what we'll need is a clear description of who the current owner is, and if it's a partnership, precise information about the percentages of ownership, a clear description of who the buyer is, a CNA, or a CNA performed by a qualified independent third party, a year-end operating statement of the previous year and year-to-date statement of the current year, a copy of the sales contract, a itemized summary of the proposed renovation, including renovation cost, and it must be done by a MAI appraiser operating in the state of Oklahoma. Does that kind of help answer the question, Pam?
And I might add that this is a requirement that was put forth by our Board of Trustees, and so many of the features in there were specific requirements from our trustees. Okay, other questions? No other questions? Going once. Oh,
We have a new message.
okay.
Oh,
Smiley
face.
Smiley face that we're ending, or
Can you extrapolate on that, Jim? Are you happy that we're here? Are you happy the seas are going up? Jim's fun.
okay. I'm being kind of slow because I'm just trying to give everybody a chance to ask a question that might want to, just in case you're not a really fast typist. Oh. Jim Rice hung over.
Okay, Pam does have a question on the appraisal. As long as the appraisal has done Oklahoma appraisals, okay? So as long as the appraiser has done other appraisals in Oklahoma, I believe that's what Pam's question is.
Yeah, I think generally speaking, yes, we want the appraiser to have experience in doing appraisals in Oklahoma. That's the key consideration.
And Lance, I agree, Zoom is not nearly as fun as in person.
So true. Okay. Any more questions? Jokes. Okay, if you do have questions, you know how to reach us. Oh, here's one. Oh, question popping up. Something about costs. I didn't see that.
Well, Pam has a question. Do you have any further guidance on previous year operating statements?
As far as the costs that we're seeing?
No, I think it's part of what's required for the rehabs now, acquiring rehabs. We're requesting those operating statements.
No further info. We're requiring them.
There are a couple of more questions in the chat as well.
Wanda wants to know if we've heard any more about cost.
In what respect? Just costs in general?
Cost of materials, the delay in materials, and just the price going up.
Well, only what we read in the paper and hear from our developers, and that is that specifically the cost of lumber is going up. But other than that, that's all we know.
Okay. Sarah has a question. Can we clarify experience in Oklahoma not the same as licensed in Oklahoma? This is to the management company.
They have to be licensed in Oklahoma. If they're doing third-party management.
I'm sorry, no, the appraisal requirement.
On the appraisal.
Does the appraiser have, are they required to be licensed in Oklahoma?
I am not sure about that. I know that they have to have experience doing appraisals in Oklahoma. The question is, can they do appraisals in Oklahoma without being licensed? I don't think they can. Aren't the appraisers licensed through the insurance department?
Andrea posted the link for the appraiser licensing entity. Lance's comment, they can have property managed in Oklahoma until they get caught without being licensed. That's back to the management company.
By the way, I think, Danette, if I'm not wrong, the chat questions and everything will be available when this Zoom meeting is posted. Isn't that right? Doesn't that get included?
Yes, I believe so.
Okay. More questions? Okay. I'll try one more time. Seeing none. Going once. Going twice. Oops. Please confirm the due date for the applications. The due dates are, let me look real quick. It's January the, what, 7th? January the 7th for the first cycle and June the 24th for the second cycle.
Yes, that's correct.
Okay, as you
I have one thing to say. I'm so sorry. I just happened to look at this at the attachments. The IRS in February of 2019 released a regulation saying that we would now have to monitor the greater of 20% of the properties, or according to the REACT chart. And that, of course, created a lot of confusion and a lot of panic around the country. Well, then COVID hit. So the IRS has rescinded that, and they rescinded it July 1, retroactive to April 1. But now it's going to be just business as usual according to how we inspect. So we now are going to inspect 20%, the lesser of 20%, or the REACT chart. Most of our properties, it's going to be our normal 20%. But we included that REACT chart in the application so that people could actually see what was going to happen, because in some cases it was going to double our inspection size. So we had some grave concerns about this, but now they've taken it away, rescinded it. So it was too late for us to make that change, because they didn't make the change until July. So I just wanted to put that out there so nobody's confused.
We have a question. Did they rescind the every building rule as well?
No, they did not. The only thing they rescinded was the number of units that have to be inspected. Everything else in that proposed rule stayed the same. And Lance, just to clarify, the IRS said that they were clarifying the requirement that every building must be inspected. So they really never did say in the beginning that every building had to be inspected. So what the majority of the country is doing is we are inspecting some aspect of every building. not necessarily every interior of every building. And I had a lengthy conversation with the IRS about this, and they said that that's fine as long as we see some aspect of it for now until they have some kind of formal ruling. That's what we're going to do.
Okay. Will OHFA accept a zoning letter stating that the proper zoning will be enacted following the closing in lieu of a final zoning determination?
No. Got to be in place at the time of application. Zoning, evidence of proper zoning. I may have mentioned this earlier, but if you all do have questions about the new application, don't hesitate to call anyone on staff or email. As you've heard us say before, we prefer email, and it helps to email more than one person. That way we can make sure that if somebody is off for 1 or 2 days, that there's somebody else there to answer the question. We always want to try to be timely in responding to your questions, because we know that time is of the essence when you're putting together these applications. And so we want to answer your questions quickly. Any other questions? Okay. I think we're adjourned.
Bye-bye.
Thank you, everybody.
Thanks, everyone.
Thank you.